thank you all for being with us today at this RockCreek Climate Summit to discuss transformational possibilities for a climate-smart economy. We're honored to have Andrew Steer, one of the world's leaders in climate change. An economist by training, Andrew served at the World Bank, where he was Special Envoy for Climate Change, and he also worked at DFID. This followed 10 years in East Asia, where he was head of the World Bank in Vietnam and Indonesia and did some of the most innovative work there. In earlier years, where Andrew was Director of Environment and Social Policy at the World Bank, I was very fortunate at the World Bank's Energy Department to learn from Andrew on some of the earliest environmental assessments that his team helped to design. Following the World Bank, he led the World Resources Institute for nearly a decade, where he quadrupled the budget, grew the staff fivefold all over the world internationally, and expanded WRI's reach and impact, making it one of the world's largest global research institutes on climate and the environment. Andrew recently moved to lead the Bezos Earth Fund, where which is committed to spending more than $10 billion by 2030 to invest in scientists, NGOs, activists, and the private sector to help drive new technologies, investment, policy change, and behavior. I've had the honor to serve on the WRI board, and I've known Andrew since we were both colleagues at the World Bank. I've seen upfront his stalwart commitment to equitable solutions to this urgent existential crisis. I'm proud to call Andrew a friend and thrilled to speak with him today. Thank you, Andrew, to be with us. And I see that you're still on Earth. You're not going on the trip with Jeff, at least today.
Well, it's great to be here, Afsaneh. Thank you so much. No, I'm still firmly on Earth. I'm in Rome, in Italy. My boss is going to space tomorrow, which is extremely exciting because once you've been up there, I'm quite sure you look at the world very differently. And I believe he will become an even more important global statesperson, protecting and developing Earth. Thank you for this opportunity. I commend you for what you're doing at RockCreek and this climate summit. The terrific conversations already today, really great. So thank you. It's an honor to be here.
Thank you, Andrew. I was curious, if you don't mind, to tell us a little bit about the Bezos Earth Fund. With the fund's resources, you've said that transformational change is possible. You're starting with grants to 16 organizations totaling almost 800 million. What are you focused on first, and what are your priorities, Andrew?
Well, look, there's a huge amount needs to be done this decade. You know, when we say this is the decisive decade, this is, we're not kidding. It really is. If we're going to really preserve Earth in a way that we can all thrive on it, this is a decade we have to act. And we all know the sort of big transitions that are required in energy, in the built environment, in food systems, in manufacturing, in transportation, in consumption. And each of these have sort of, if you like, mini revolutions within them, but they're not mini at all. In transport, we've got to get rid of the internal combustion engine. In food, we've got to improve yields without encroaching into forests. And we've got to shift diets. We've got to reduce food loss and waste by half this decade. And so across all of these revolutions, there's a whole sort of set of things that need to happen. And what we do, the Bezos Earth Fund, is really ask the question, how can we use this incredibly privileged, precious resources that we have, $10 billion to be allocated as grants over the next, for the rest of this decade, if you like. How can we allocate them sort of boldly, firmly, in a way that helps these transitions sort of accelerate and cross tipping points? And so in some cases, we need basic research, quite frankly, and we will be investing in that. In other cases, you need to make markets. In other cases, you need to provide monitoring systems. In others, you need to de-risk investments. In others, you need political advocacy and policy change. And so what we're doing is really asking the question, which of these transitions, and there are probably about 40 of them, which of them are already approaching or crossing tipping points? They don't need any help. You know, wind energy in Texas doesn't need any help from us, that's for sure. And probably about 10 of them are already doing fine. Others at the other end of the spectrum are just getting going. They may need basic research. They may need sort of, if you like, citizen action. And so what we're doing is diagnosing them and identifying where can we come in to have the most helpful impact in driving things along. Philanthropy is obviously just one modest player in the overall jigsaw puzzle of climate finance, but we are able to operate in a different way. We're able to operate, we can take risks that others can't. We can act more quickly than others can. So we do have a special role, but obviously everything we do has to be thought through in terms of the leverage. What can we do in order to encourage and catalyze much, much larger investments?
So talking about investments, as you said, there are many areas and you're looking at over 40 different sectors and solutions. But if you thought about one single most important investment that we all need to make, Andrew, right now to combat climate change, is it possible to think of one investment, or is that too simplistic an idea?
Well, it's not simplistic at all, but it is true to say that we are that there are no silver bullets. It's better to think of it as a jigsaw puzzle. You know, when you visit your doctor, he or she will say, there's one thing you must do. But often, certainly to me, they say, well, look, there's a range of things you need to do. You need to invest in better diet, in exercise. You need to manage your sleep better, and so on. And so it is with this, that actually we no longer can identify sort of silver bullets. There's a revolution that's gone on in the last 10 years, where, do you remember we used to talk a lot about the marginal abatement cost curve? A marginal abatement cost curve basically starts at the bottom left-hand side, and it's below zero. And as you go along the horizontal axis, that's as you want to reduce more and more carbon, the marginal cost rises. So you start on the left-hand side, and you do very cheap things that actually cost less than nothing. Energy efficiency pays for itself in 2 or 3 years. So actually, it doesn't cost you anything. There's no incremental cost at all. Far right-hand side, you know, you had the really expensive things, carbon capture and storage, the hydrogen economy, all kinds of expensive things. Now, 10 years ago, you could say, well, actually, we're aiming for a 2-degree world, and we actually have to move about halfway along. And so you actually did need to then prioritize and say, we've got to do this first. And you could forget about the really expensive things at the top right-hand corner. Unfortunately, we've now wasted a couple more decades. And we've also realized that 2 degrees isn't going to do it. We've got to limit global temperatures to 1.5 degrees. That means we have to go basically all the way over to the right-hand side of the marginal abatement cost curve. So even expensive things like investing in the hydrogen economy, we have to do now. So it's not that, yes, energy efficiency is very important. Yes, renewable energy is absolutely essential. Yes, new kind of building materials, absolutely essential. Yes, etc. But we also need to do the more expensive things. And so even 10 years ago, if you were running a steel mill, you could say, well, actually, it's great because there's a carbon trading system, let's just imagine. Therefore, I can pay to delay anything that I need to do. I can pay someone else to do it, and they'll do it much more cheaply. What we now need to do is say that steel mill or that airline, you know, or that cement factory, you'd better be investing now, at least in research. So whilst this decade, you might only need to, perhaps your trajectory will be a 1% reduction per year, as opposed to the 4.2% reduction that the world's economy as a whole will need to do each year. So if this decade, maybe you do your 1%, but you'd better be investing now in technologies. So next decade, you'll be able to do 5% reduction per year, so to speak. So that's a long and rambling answer to the question, is there a priority? Is there a most important one? No, it's now much more exciting. We now need to really, if you like, have a war room or a situation room where we actually understand how these transitions are coming along, which are approaching tipping points, which need to be given a real kick to move along, which need to mobilize citizen action, which need to use new financial techniques, and so on.
and Andrew, you were just talking about hydrogen, and I think just a year or two ago, it was seen as something that is not very common, even though a lot of the technology that is used has been around for almost a decade, if not 100 years for some of the more basic parts of the technology. There are articles every day now on the use of hydrogen, and that has gone from zero almost a year ago in the US, especially, while in Europe, it has been more of a potential source of energy. As you're looking at the research part of what you're supporting and looking forward, do you really truly see by 2030 hydrogen getting used in trains, in planes, in other industry, as we're seeing in some companies in the UK, in Sheffield? Is that something that you see as a reality?
Well, hydrogen is still expensive, obviously, but we're learning a lot about it, and almost certainly it will become, a fuel that is also storage, energy storage, which is so important because as you move towards renewable energy, of course, you can't always predict that the wind will blow and the sun will shine. So you need what's sort of called a base load, or you need some kind of storage. And storage, of course, is expensive, although it's coming down rapidly. And hydrogen, of course, just like fossil fuels, is a great storage of energy. I mean, fossil fuels is a storage of solar energy that's pretty effective. The problem is it's very negative in terms of climate change, whilst, of course, hydrogen is not. So certainly there's a huge amount of research to be done. And of course, there are a large number of companies, many of them quite small, doing extremely innovative work. And of course, what one needs to really do again is try and diagnose what's the problem here. Does it need public investment in basic research? Does philanthropy have a role? Or is there something to do with de-risking here that's more important? Or perhaps making a market? Do you remember the advanced market commitments that were invented for the health sector about 20 years ago? Where, do you remember? I think you were probably when you were the financial wizard in chief at the World Bank doing all kinds of innovation, you were probably involved in that, Afsaneh, I don't know. But the idea was, how do you create these new markets when it's too risky for a company to actually invest? And the advanced market commitments was that we will guarantee for the developing world that we will buy so much. That's just one instrument. There are many others as well. So we've got to be really creative. And that's what's so exciting, I think, about what you're doing, bringing together these financial geniuses who are really sort of thinking through some of these issues.
Well, we're fortunate, Andrew, to talk to you. And one of the more recent exciting things that I did was to listen to a recent TED Talk you did, which is really, truly one of the best I have ever listened to. And what I was wondering is, you talked about path dependency, the idea that we're on a path that we know is not sustainable, yet we stay on it because we have so much invested in it. Can you give us some examples of ways that we can break off the path we're on and move to the kind of path that you were talking about earlier?
Well, I do agree with you. Path dependency is actually an exceedingly important concept that we economists actually have not really thought through adequately. We have spent most of our careers in the economic profession in doing modeling, which is really all about sort of straight lines and smooth curves. And it's basically about the assumption that the past will be a pretty good way of providing insights as to the future. And in fact, what we're now learning, of course, is that incremental change is not going to get you there for two reasons. One, we've got to act very quickly, but there's a second reason, which is some things can't be done incrementally. So the idea of path dependency is I'm on a path. I sort of know it's not a very good path. I mean, for example, sitting 3 hours in traffic in Mexico City, every day to get to work, we sort of know that's really not a very smart path. Same thing in Los Angeles, only much less time, but still, we actually know there are better ways of doing it. We actually know that actually public transport can be comfortable and much more efficient. You can save, $1 trillion a year for the GDP of the United States. $1 trillion is what the United States is learning due to traffic congestion. And we know, we've got lots of research that shows there's a better way. Indeed, Europe has quite a lot to teach us, if you like, about that. We've done lots of analysis comparing cities of the same size in Europe and the United States. But here's the point. You can't just gradually shift your entire transport system. You need to do something much more disruptive. Same thing's exactly true with, and the reason for that is that you have locked in capital, which is very difficult, but you also have locked in vested interests. So for example, switching to the electrification of transportation, yes, you could do it gradually, but actually there are such vested interests in the automobile industry, in the oil and gas industry, in the road building industry, and so on. And so what the kind of thing that, say, Prime Minister Boris Johnson did, a few months ago, and Europe's doing, he said, look, after 2030, no internal combustion engines will be sold for small vehicles in the United Kingdom. And Europe is saying it for 2035. California, General Motors is now saying 2035. Those are disruptive changes. Incremental changes won't get you there. Why? Because we have this path dependency. We have this locked-in infrastructure with gas stations. We have locked-in infrastructure in terms of vested interest. So you need to sort of break that. And of course, the best politicians, whether it's Donald Trump or not that he's the best politician morally, but in terms of understanding the need to do something disruptive, or a Margaret Thatcher, for example, or Ronald Reagan, understood you've got to make a shift. And we need to do the same kind of thing, only the shift needs to be a very positive shift. And of course, that the economy as a whole will benefit very, very quickly. But obviously, there will also be losers as well as winners. And I think we've done a very poor job at really understanding the idea that there will be losers. And that's why the whole sort of, if you like, just transition issue has come so much to the fore. And we need to really think that through very, very carefully.
In fact, you've talked about that. You've talked about the fact that climate smart policies can also create new jobs and a higher quality of life, but also, as you said, create potentially people who are out of jobs, whether they're in the coal industry or in areas that are we're getting out of. Can you take us through a little bit about how we can make investments and how we can move more towards a just climate world as we make these shifts?
Yes, I absolutely agree with the sort of implication of your question. The argument so far from those of us in the environmental community has been, look, there are only 70,000 coal miners in the United States, and actually renewable energy already has more than 2 million workers in it. So obviously, it's better to go towards renewable energy. But the plain fact of the matter is there's still 70,000 families that actually aren't going to have jobs anymore, and they may not be able to move directly into some of these greener jobs. And so with the environmental movement, and obviously governments need to think this through very carefully. And of course, it has to be thought through very carefully when it comes to the fact that it is the poor that not only are the most affected by climate change and environmental damage. I mean, there's overwhelming evidence that basically almost every environmental problem hurts the poor more than it hurts the rich, even though it's often the rich that have caused more of the problem. But then there's a second point here, which is in solving the problem, the poor indeed may be hurt. And so, for example, you have this absolutely fascinating case with regard to, say, the cap and trade system in California. Very good idea, a very efficient way of addressing climate change, and yet wasn't thought through carefully enough. And it turned out that in some poor areas, those were the areas in which pollution continued, as those that ran those factories were willing to pay others to clean up their mess. And so, legitimately, a number of climate justice groups said, wait a minute, this is actually hurting our community. And so you've now got this rather sort of sad situation where the climate justice movement is actually opposed to policies which are actually quite good policies, cap and trade systems or a carbon tax. They're actually very, very good policies, but they have to be designed right. And the sad thing is that we have not learned enough about how to design policies right. We sort of rush in and we design them in a way that might work well in an old-fashioned economics textbook, but in the real world, where you've got to think about inequality and you've got to think about, you know, those who are adversely affected, may not be optimal.
Andrew, I remember you were working in Vietnam and Indonesia, and you were thinking even many years ago about this issue of climate justice. While it's come to the fore more recently, particularly in the US, you were one of the early thinkers about the topic, and particularly helping the marginalized communities in Southeast Asia. Can you give us some examples of how you now at the Bezos Earth Fund will address not only the nature and the environment, but also some of these communities? Do you have any specific plans you can share with us, or is it too early?
Well, we're early in this business, so I've just had I've just been 3 months on the job, so we're giving a lot of thought to it. But let me say this: I mean, in the first round of Earth Fund grants, which you mentioned at the beginning, nearly $800 million. You know, Jeff Bezos divided that really into three. You know, money that would be spent on the United States, money that would be spent on other countries, and money that would be spent globally. If you look at the amount spent in the United States, half of all the money that he allocated went to climate justice groups. And that wasn't an accident. That was because it was important to demonstrate that we actually do have a serious problem here. And we actually do need to shift the needle, whereby those who are most adversely affected have received less resources than others. And often they have the best solutions too. And so that was just one example. Now, as we move forward, of course, in the United States, there remains a real problem. And it's really exciting to see the Biden administration. They've come up with something called Justice 40, which is as they expand the infrastructure spending, the American Jobs Act and the clean infrastructure programs, the commitment is to spend 40% of that in a way that benefits disadvantaged areas and areas of color. That's a difficult thing to do, by the way, but we've been talking to them about, you know, is there any way potentially we could be helpful in making this happen? That would just be one example. But of course, around the world, there are just, you know, shocking examples today of poor people being affected. I mean, and Afsaneh, I know you are very aware of this because you have a career in development, but you think of African farmers who already were finding it hard to eke out a living, and now suddenly drought is much, much worse. And as a result, many of them go out of business. They have to go as you know, desperately poor people to migrate to cities. I mean, there's just a great sadness out there at the moment. And you know, think of sea level rise. I mean, talk to even a highly sophisticated country like Fiji. You know, they're having to move villages. They had enough money to electrify all houses, but then they realized that actually the electricity was going to be above ground because it's cheaper. They then were told that actually storms will become so much worse, they have to put the electricity wires underground. That doubles the price. Just think about a minister of finance having to deal with this. So there are some real moral and substantive and development issues. And of course, you know, climate change could undermine the amazing progress that we've seen happen. I mean, you and I have worked on this for decades, and we've seen the biggest reduction in poverty in world history by far, and it's a huge blessing. But that is seriously under threat today.
I think you're so right. Between COVID and climate change, a lot of the gains that have been made in the last 2 decades, I don't want to say could all go away, but could be hugely threatened. And again, as you said, we can move towards smarter things so that, let's say with COVID, I was just thinking about what you were saying on reducing transport costs or improving cities to be smarter cities, or houses to be smarter houses. But very importantly, as you said, for some of these island economies, and you've worked on some of the biggest ones in the world, and I remember working on Bangladesh, where similar issues are going on with sea level, and how should we thinking about electrification, particularly for the poor, and what are the best mechanisms to get electricity in the smartest way, and whether distributed versus none is smarter, but also all the other things you talked about, Andrew. While we turn, the news on climate is not generally good, right? Whether we think about the floods in Europe, whether we're thinking about the fires in the US, whether we're thinking about the ocean moving the way it is, and ice melting and affecting all parts of the world, particularly, as you said, the most vulnerable in Africa and Asia. Scientists are saying that some of the things that are happening now, like in Europe with the floods, might not have happened in 500 years. So these are not 100 or 200-year events, but things that were really not supposed to happen so fast. And you've said, don't be scared by what's going on, although it's scary. How do you maintain that hope and optimism, Andrew? And where can we look for hope right now?
Well, I think we live in this this sort of tension, don't we, between despair and genuine, thrilling optimism. I mean, those of us that were in Paris in 2015, if you were to say, by 2021, over 100 countries, accounting for 60% of all greenhouse gas emissions, would have committed to move to net zero by 2050, the middle of the century, we would have said in our wildest dreams that would have happened. And if you'd said there will be 2,000 major corporations that would have made the same commitment by then, we wouldn't have believed it. 1,500 have 5-year goals that are consistent with net zero. And in finance, which you obviously lead the field in, if someone had said that according to how you measure it, between 20 and 40 trillion dollars of assets under management would be committed to move towards net zero portfolios by 2050, we would have said just not possible. Now, many of these banks and asset holders and asset managers don't really know what it means to they don't know how they're going to get there. But nonetheless, President Kennedy wasn't exactly sure how he was going to get to the moon, but most of these commitments seem serious. And there is the most exciting intellectual fervor at the moment on sort of how do we get to this net zero? What is net zero? How do we get there? What would a short-term path be to get there? So it's profoundly exciting. And we've all seen those famous charts from the International Energy Agency that since the year 2000, they've predicted what renewable energy will be for the next 30 years. So they've had a projection for 2030 for the last 20 years, but basically every single year they have ramped that curve up. And they've been profoundly wrong in the way they have understood that. And of course, this is precisely the point about we need a new, much more dynamic economics where we understand that actually there's a dynamism here in technological development and in risk-taking that we didn't understand. And by the way, IEA is a wonderful organization. It's got great leadership. It's got fantastic people work for it. The plain fact of the matter is they have been systematically underestimating the rate at which the energy transition can take place. And the same thing will and is being true in other sectors too. So there's a hugely positive story. And so that's why you can meet two experts, and one will say, it's fantastic what we're doing. I mean, it's amazing, the progress. And the other one says, we're falling over a cliff. It's Armageddon. And the question is, which is right? And the answer, they're both right. They're both right. The image I like is the notion of, we're doing so much better. We're like a dog that's running faster and faster, chasing a bus. The problem, the bus is the problem, if you like, of climate change that needs to be solved. The problem is the bus is accelerating. So even though the dog is doing better and better, it's still falling further behind. That's where we are today. And of course, the answer is not that the dog should run faster and faster, but the dog needs a different vehicle altogether. That's what we need. We need a different way, a more disruptive way. And we're now starting to see it. And even in the lead up to COP26, these so-called races to zero, I mean, it's quite exciting. We're seeing a really new way of thinking about things.
Andrew, what would you like to see come out of Glasgow, and how hopeful are you about that?
So the first thing is ambition of countries, and I'd say that's mixed. So whilst it is spectacular that so many countries are committing to net zero in the middle of the century, that seems to be easier to do politically than to commit to do something for the next 10 years. And so if you look at the so-called NDCs, and now there are approaching 100 of them that have been sent in, about half of them are really quite good, real improvements. The other half aren't really improvements. And so it's actually quite interesting. Some of the countries that have sent in their NDCs, like Japan, for example, they've now admitted that they're not good enough. They're going to come with a new version, even though they only sent theirs in a few months ago. They're now going to come with a new version. So this notion of ambition is the biggest single thing. And here, there just needs to be a narrative that becomes irresistible. And the narrative is one that, I know, Afsaneh, you've been sort of very involved in. The economics of the 20th century was one of trade-offs. And it was, well, it would be really nice to do something on climate change, but actually we're going to have to assess the benefits and the costs. And even if we look at Nick Stern's famous Stern report, it was, if you like, that economics. And he would be the first to say that he'd write it totally differently today. And the way he wrote it then was the right way to write it, because technology prices hadn't come down. And basically it said the cost today is fairly high. The potential benefits in the future are even higher, but they are quite a while in the future. So it's all about discount rates. It's all about how do you discount future benefits, which are going to be higher, but uncertain, with costs today, which are quite substantial. And the costs today will be costs of employment and so on, as well as financial costs. And so that was the calculus. It was a calculus of trade-offs. We now live in a totally different economics, the economics of the new climate economy, which basically says, and there's huge empirical evidence to support this, it says that actually smart, strong climate action leads to greater economic efficiency, it drives new technologies, and it lowers risks. And these three things combined are a very powerful cocktail that actually leads to more investment, a whole new economy out there with new technologies, more competitiveness, and so on. Now, most politicians in the world still don't get that. The amazing thing is that corporations increasingly are getting that. And most exciting of all, the financial sector is starting to get this. A really amazing thing happened 2 years ago, totally counterintuitive. When the IPCC came out with their report on 1.5 degrees, they basically said, we used to recommend limiting temperatures to 2 degrees increase. We now know that's too dangerous. It must be 1.5 degrees. And by the way, if you're going to limit it to 1.5 degrees, you will need absolute revolution in the way the world economy is run. A lot of people then said, my goodness me, we will lose all the leadership. Leaders of corporations and countries will run from the hills because this is going to be too big a lift. And in fact, the opposite happened. Got a huge new generation of corporate leaders who said, actually, this is the time of my life. This is what leadership is all about. It is understanding risks, and it's managing them, but it's seizing opportunities. So you've got this fascinating situation, for example, whereby take Amazon, for example. Amazon said, look, IPCC said go to net zero by 2050. We think we should do it 10 years earlier at 2040. And we will try and recruit others to join. And now 106 major companies have joined the so-called climate pledge, which is to reach net zero by 2040. The question is why? And the answer is they understand the new climate economy. They understand that this will lead to greater, not only long-term profits, but actually medium-term profits as well. And in some instances, really short-term profits. Why? Because they will see their share price being rewarded with this kind of leadership.
Andrew, you're so right. And when we look at the behavior of your children, my children, and their generation, and the next generations to come, they're much more cognizant of everything you've talked about. And I want to sort of unbundle. You've talked about so many really, really interesting things just now. And let's talk about leaders in finance. You've been working a lot over the last decade, in particular with leaders in industry, and you continue to. And as you said, behavior has changed and priorities have changed because they're listening to their consumers also, and they're taking leadership. How do we make sure in finance, where large amounts of assets, financial assets are getting allocated? And again, it's an area you thought about a lot when you were at WRI with its own endowments. How do you make sure that on the one hand, the leaders in finance take this seriously? So if you go into their offices, there are no plastic bottles, the use of planes or the use of energy intensive or climate impact is something that they include in their calculations. It's really not yet very commonly done by the largest allocators, whether they're pension funds, whether they're sovereign funds, whether they're banks. In fact, I was listening recently talking to the head of the Temasek group in Singapore. They do include like a $35 per ton carbon tax when they, as if it was a real tax, and they might take that up to $40. But you don't see that commonly in finance sector. And what do we do together to change that, the same way you've changed the attitudes in industry?
Well, when you and I did graduate school work in finance, if someone had told us that the job of the financial sector was to address climate change, we would have asked them what they were smoking.
Right.
And in those days, that was a reasonable question, by the way. We would have said that's the most ridiculous question. Exactly. The job of the financial sector is to assess risk and allocate, resources according to risk and return. And it's not to dabble in, morality or anything. We honestly believe that the financial sector was sort of unbiased, veil that would simply do things. Turns out we were actually wrong. The financial sector has been net negative, and the reason until very recently, and the reason is, number one, it's fairly short term. And if you want to invest in the future economy, you actually need longer term horizons. And second, actually, the financial sector hasn't been very good at assessing risk. It's become good at assessing certain kinds of risk, but not climate risk. And so until 10 years ago, the financial sector was, in my view, net negative. It wasn't neutral, as we would have claimed. It was net negative. And what's happened since then has been absolutely wonderful in some regards. One, just the empirical observation that your firm spends a lot of time on. Or the empirical evidence is that if you invest in companies with high ESG, that doesn't mean you have to put all your money in green investments. It means you pick companies across the entire economy that actually understand ESG and actually have goals. Turns out the returns are higher, and that's been one of the most important empirical developments in the last 10 years. You've been at the absolute center of that, Afsaneh. And of course, the whole disclosure movement as well has been remarkable. And the fact that you now have these I have the privilege of co-chairing for HSBC, their climate advisory group, and I'm also on the Bank of America's advisory group. It's been wonderful to see a genuine struggle. I mean, on very, very difficult issues on, can we declare not only that we're going to put another 100 billion or 200 billion into green investments, but actually our entire portfolio is going to become sort of honorable and consistent with 1.5 degrees. Very, very exciting. Now, whether that's yet being mainstream, no, it's not. And as you say, I mean, even if the technicians are increasingly understanding, and nonetheless, there can be a lifestyle and so on that is not consistent. And so, I mean, one of the things I really like about the way you think about it, RockCreek, is, you will be judged by the actions that you take as an individual, as well as a corporation, as well as a fund manager, and so on. But the pace of change can be illustrated even in environmental NGOs like WRI. When you joined the board and I became president of WRI, our modest endowment of $40 million was allocated without a single iota of effort to put that money into sustainable investments, none. And some of us said, wait a minute, surely this isn't right. We were told, and you were not on the finance committee then, so it's not your fault, Afsaneh. We were told, look, our job is to make you money with your endowment. Exactly. Your job, Andrew, is to spend it. So we will give you the resources, but don't you be telling us how to invest our resources. You took over as chair of the finance committee. Now look at us. I mean, amazing. It's totally and utterly the rates of return the return on our still modest but growing endowment at WRI have risen hugely. Even as we totally redirected it towards, not towards just the green segment of the economy, across a broad swath of the economy, but focusing in a technically highly sophisticated way on companies that are doing well. And so that's just, I mean, if environmental organizations have only just got it, it's going to take us a bit of a time before everyone else gets it.
Well, it was your own leadership, really, Andrew, that made that change. And I think you know that well. And I'm very grateful to you for doing that. But as we speak today, there are a lot of people watching us and listening to us who happen to be at many university and endowments, foundations, pension funds, as well as policymakers and academics. And you touched on what we learned when we were both fellow students in economics. And the word externality is what we were taught, right? All these other things are externalities, hard to measure, can't really incorporate it into your calculations. And as you sort of have one message for people who are at these universities, how should economics be taught? As you said, Nick Stern has been very thoughtful about this and has talked a lot about this more recently. But how do we get maybe rid of the word externality and be transformational about that also and come up with a new word? Maybe Andrew Steer could come up with the new term. And then secondly, how do we get universities that are the center of research to move to where you moved to in WRI, which is if this is science, if this is good investments, and the last few years we've seen that good companies do make better investments and are more climate savvy, because these are huge risks to their own companies. So how do we marry those two things together? Teach better economics, teach better endowment management, teach better investment management, all in one to this next generation?
A very good question, and I think your wisdom would be as great as mine. But look, I mean, the notion of externalities is still very valid. We just need to internalize those externalities. So, you know, a lot of people say, "Oh, the economics profession is terrible; it's caused the problem." Well, actually, no. In 1923, Professor Pigou of Cambridge University wrote his Economics of Welfare, and he said, quite honestly, it's really better for the economy and for citizens if you tax bad things like pollution and congestion, rather than good things like employment and income, for example. And we've known that for, well, next year, 2 years from now, it'll be 100 years that we've known. And no serious economist would deny that. I mean, the economics of welfare has progressed a lot. We still know that by taxing some things, we don't distort. You know, a lot of Republicans will say, "Oh, you put a carbon tax on, that's distortionary." No. If you put a price on something that internalizes something that's not priced, that reduces distortion. There's a distortion today by the fact that I can pollute and hurt some poor person downriver, and I don't have to pay anything for it. That's a distortion to the economy and to human welfare. So there's nothing wrong with the notion of externalities. What we need to do is we need to apply the economics we've learned. But there are, as you suggest,
you're not coming up with a new term, right?
No. Well, we'll give that some thought. But there are some aspects of economics that really do need to be changed. Most importantly, most ministries of finance and planning around the world use economic models that are based on the notion of equilibrium. That's how they work. You know, basically a model is a great big series of simultaneous equations, and they have to be solved. That's how a model works, as it looks into the future. The problem is most of them, almost all of them, assume that the economy will adjust to bring itself back into equilibrium. That, it turns out, is not a very helpful assumption if you want to really plan for the future. And so what we're learning is that some of the economics that I certainly learned, and I suspect you did too, such as let the economy take care of itself. Certainly it's not the role of government to engage and pick sectors. Industrial policy is a bad thing. And often, by the way, it has been a very bad thing. We are learning, though, that actually there's a disequilibrium that needs to be honored, if you like. And actually, the world has often progressed the most through disequilibrium. You know, if you like, sort of a creative destruction is actually can be quite helpful. So I think there is we need a new generation of modelers who actually that can actually design models that are appropriate for the 2020s and 2030s, and not just the last century too. So I certainly wouldn't give the economics profession an A+, but at the same time, I certainly wouldn't throw everything out as some would like to do.
Well, thank you, Andrew. I think to be continued, but I look forward to the new terminology you will create and the new thoughtful ways that you will make sure that we do a much better job in our lives, in our businesses, and in everything we do on climate. And we owe you a lot for everything you do to transform the economy, and wish you great luck as you proceed with spending the next 10 billion.
Thank you, Afsaneh. It's lovely to be with you, and I commend you for all you're doing.